you got to be weary of the guy who says this time it's different. But I will tell you, it certainly feels that this time it is different. I mean, I'll give you some examples. The United States being a net importer of metal has never happened before. An administration who continues to drop clues and hints that gold and silver are certainly, whether it be reclassified as a strategic mineral or the comments, Trump, he who has the gold makes the rules, Besant being a self-proclaimed gold bug. We've talked about Judy Shelton, or Senator Lummis, all of the things about gold revaluation. The Federal Reserve just wrote a report on it. Everything that's happening with the BRICS, and this is something that should not be overlooked, and they are massively tied to gold. The fact that now the rumor about everything I was talking about with the expansion of the Shanghai Metals Exchange and the settling in gold outside of the trading in local currencies over Enbridge, they're now talking about, the rumor is they will have a gold-denominated repo facility. You shouldn't trust the government data to guide your moves in precious metals. Their incentives are to mislead you, not to protect you. That is incredibly true. But there is a million reasons in both gold and silver why I would argue this is just beginning, and I'm happy to go through every single one of them as we go through this. I honestly believe this is just beginning, and I know that sounds hard to believe, but no, I think, yes, the performance has been spectacular. Both gold and silver approaching 40% for the year, the dollar down 11%. What's more startling to me above all else is that you're getting nothing from the mainstream talking about this. And that to me should be a guide to people saying, well, geez, if it's performing that well. In fact, you know, just one comment on that. You take a look at the S&P 500 as an example, which has had a massive run, one of the biggest runs ever in the history of the market. And this comes in light of the greatest tech boom since the internet. And yet gold and silver have outperformed the rise in the S&P by a fourfold increase in the last 6 months. So while the S&P is up like 1,600 points, it's only a 9% gain. You're up 37% year to date.
Technology stocks led by AI giants like Nvidia and Apple have dominated headlines. But beneath the surface, gold's rally reveals where confidence and liquidity are quietly shifting. Over the past 6 months, gold has surged nearly 4 times the S&P's return, despite one of the largest tech booms in history. This divergence is extraordinary. AI may dominate the narrative, but investors with serious capital appear to be hedging elsewhere. The lack of mainstream coverage suggests deliberate omission. Gold isn't just keeping pace with innovation, it's quietly signaling deeper cracks in the financial system.
4 times that of the S&P's return. This is the strongest rally in decades for the S&P, and yet gold's up nearly 4 times the return of the S&P. And what's crazier to me, you know, amidst this massive AI boom, biggest tech story ever, you know, the markets may be celebrating AI, but gold is telling a different story where the confidence and the capital are actually moving at them. And I say, you know, where's journalistic integrity? You would think that gold reclassified tier 1, massive inflows into the United States, becoming net importers, 4 times the performance of the S&P over the last really 5-6 months. Since 2023, gold's up 100%, the S&P's up 67%. And why isn't the media screaming about this? Why isn't the media saying, oh, by the way, silver is really beating everything this year, including Bitcoin. And by the way, the US government just reclassified it a strategic mineral. What? The US government just put a floor under the price of silver for y'all. And if you don't understand that, then I think that this nonsense of it being too expensive and being too risky is exactly the narrative that the big money, who is wickedly accumulating it, wants us all to believe. Yeah, we haven't seen anything yet, in my opinion, Adam.
Silver's performance has outpaced nearly every major asset, including Bitcoin, yet it receives little attention. Recently, the U.S. government reclassified silver as a strategic mineral, effectively placing a policy-driven floor under its value. This decision underscores silver's importance in defense, renewable energy, and high-tech industries. Meanwhile, supply remains tight, with London vaults reportedly holding less than 1 day's worth of global silver trading volume. When demand collides with dwindling supply, the market narrative of too expensive becomes a distraction. Big players know this, and they're accumulating aggressively while retail investors remain skeptical.
I would argue probably most of the public sold their gold a long time ago, those that wanted to sell it on the way up. It's just been muted. You know, we have this entire generation of investors who believe if returns aren't triple digit, they're not worth your time. And you know, I get it with the return we've seen in Apple and Nvidia and Bitcoin and this massive tech boom. You know, a 30-40% per year return just doesn't cut it. Richard Russell, my mentor, God rest his soul, I talked with him many times, and he would say to me, Andy, if you make 7% a year, you'll go down in the investing Hall of Fame. The public is not paying attention to it. And at the same time, I would argue probably that those that needed to sell gold, look, these would have been the same people that would have said there's no way gold goes above $2,000. And once it did, it probably siphoned out the majority of the weak hands that wanted to let go of their jewelry or whatever scrap gold that they had. It's probably not really as lucrative of a business any longer at these levels. I doubt many people have much to sell anymore. So yeah, it is an interesting point for sure. Not so much on the physical side of things to take profits off the table. You certainly could. I mean, it's been a nice run. The mining shares certainly are far more volatile. There's nothing wrong with putting some trailing stops, I guess, underneath your positions if they're up that much. The leverage you get in mining shares is fantastic. It cuts both ways, however. You know,
the financial architecture is being reshaped. BRICS nations are building systems that settle trade in gold rather than U.S. dollars, challenging Western price-setting mechanisms like the COMEX and LBMA. Shanghai is preparing a gold-based repo facility where metal will serve as collateral for international loans. Vault networks are expanding across the Belt and Road Initiative, with Saudi Arabia's inclusion marking a major geopolitical shift. This signals a move toward multipolar price discovery, where gold anchors trade and finance. If Western exchanges lose dominance, the East could soon dictate global metal valuations.
You got to be wary of the guy who says this time it's different, but I will tell you, it certainly feels that this time it is different. I mean, I'll give you some examples. The United States being a net importer of metal has never happened before. An administration who continues to drop clues and hints that gold and silver are certainly, whether it be reclassified as a strategic mineral or the comments, Trump, he who has the gold makes the rules, Besant being a self-proclaimed gold bug. We've talked about Judy Shelton, or Senator Lummis, all of the things about gold revaluation. The Federal Reserve just wrote a report on it. Everything that's happening with the BRICS, and this is something that should not be overlooked, and they are massively tied to gold. The fact that now the rumor about everything I was talking about with the expansion of the Shanghai Metals Exchange and the settling in gold outside of the trading and local currencies over Enbridge, they're now talking about, the rumor is they will have a gold denominated repo facility.
The world's most powerful financial institutions are making their moves. Central banks, led by China, India, and Russia, have been buying gold at record levels, something retail investors often overlook. In the U.S., imports of both gold and silver have surged, marking a historic reversal as the nation becomes a net importer. Meanwhile, policymakers float trial balloons about gold's role in future monetary systems. From the Federal Reserve's own research papers to lawmakers openly endorsing revaluation, the clues are everywhere. When the institutions controlling the money supply hoard precious metals, retail investors should ask why.
That will be part of the Shanghai Metals Exchange, where you will take gold and use it as collateral with metal held in the Shanghai Metals Exchange and in the series of vaults that are now being built all around the Belt Road. The next one is being built right now in Saudi Arabia, which is very symbolic but using it as a repo facility for renminbi-based loans where, all of a sudden the Chinese and the Belt Road Initiative, who are trying to help build this ecosystem amongst all of these underdeveloped countries, will take gold as collateral for loans for repo. Repo is typically associated with giving liquidity to the worldwide market by exchanging treasuries for cash and then being able to buy them back at a later date at a higher price. If you can now switch that to gold, my point is that I truly believe we are just getting started. I truly believe with the passage of the Genius Act and the passage of a synthetic demand for U.S. treasuries, we have entered a new monetary system, and gold will be part of it. Silver will follow. Should you take profits? Sure, it's not a four-letter word. You certainly could. Would I personally? No, not yet, because I've never seen a market that behaves quite like this one does, with the fundamentals that are growing at the highest levels. And I guess what I would simply say is that when like I said, the people running the money printers are buying gold, the central banks, you should pay attention. When the most sophisticated institutional traders in this country go from net sellers to net buyers, you better pay attention. And it's just beginning. And then when the US government comes in and says silver's now a strategic mineral, that's just a floor been put underneath the price of silver by the US government. And the massive imports coming into the United States, I would argue there's a floor under the price of gold. Ultimately, I think gold will be tied to a new system, a new monetary system. It will be definitely tied to one in the global south, and I think it will be tied to the treasury market here, a floor underneath the price of gold. So in my mind, this time is different. There's nothing wrong with taking a profit. It means you've won. But I would say that I think this, you'll look back at it. Look, let me put it this way. Goldman Sachs just came out and said if the market even thinks the Fed loses any bit of its independence, you'll see gold at 5,000 like that. Does anyone really believe the Fed is independent anymore? With Stephen Miran, the architect of the Mar-a-Lago Accord, now being put into the Fed, and the pressure that Trump is giving, and all of a sudden they talk about bending to 25% or 50% drop tomorrow. The Fed has lost its independence, which is nothing new, by the way. You go back through history, the Fed and the president have been intertwined more than you would think. They're telling you gold's going to go higher. And you look at a guy like Luke Gromen, who's as smart as anyone in this industry. He said, yeah, they're going to let gold go much higher, slowly, organically, before they revalue it. So I don't think we're even out of the second inning yet where this is going, Adam. So if it were me, I wouldn't fault someone for doing it.
Markets thrive on perception, but the fundamentals point to a deeper transformation. Analysts warn that the LBMA's paper-driven silver trade is on fragile ground, with hundreds of paper claims against every real ounce. If trust in these systems collapses, price discovery could shift permanently eastward. Many experts argue we're still in the early innings of a gold and silver revaluation cycle, where capital flows and geopolitics collide. Taking profits isn't wrong, but long-term, metals may anchor a new monetary order. In a world of devalued dollars and rising debt, gold and silver are more than investments. They're survival tools.
Because I think they'll both be at play, because part of what they, I believe, want to do is greatly devalue the dollar in order to make manufacturing attractive again. And we've talked about that.
And make the debts easier to repay. Yeah.
Correct, and pegging the back end of the bond market to gold so they can bring back manufacturing at zero borrowing costs. The Mar-a-Lago Accord speaks to a devalued dollar, and so I think a good portion of it will be devaluing the dollar. But let's look at it from a standpoint of price setting, which is really, I think, part of the bigger picture to reach real price discovery. When you have a market where price is discovered, for example, in London and or in the United States, this is the problem, I think, in that the LBMA and to a degree also the COMEX have been setting prices for the entire world that have been massively rehypothecated. Mm-hmm. In other words, they sell the same paper over and over and over and over again, fearing or realizing that no one ever stands for delivery, until they now are standing for delivery. And so when you see all of these exchanges being set up around the world, in Moscow, in St. Petersburg, in Shanghai, in Hong Kong, in Saudi Arabia, in Singapore, all around the world. These are exchanges where the people not only have been accumulating tremendous amounts, but they're the ones who understand it a lot better. These are mostly cash and carry markets. Ultimately, I could see a point where the LBMA is on the ropes. And I mean, I really do believe that the LBMA is on the ropes right now in many respects. I mean, there was just an article by a guy named Daniel Gali, senior commodity strategist at TD Securities, warning investors that silver appears to be entering the end game of the current cycle as demand, now driven by renewed investor interest, eats away at the last dregs of above ground supply. In an interview with Kitco News, Gali said the free-floating stockpiles in the vaults of the London bullion market could run dry within 7 months if investment demand picks up. They actually only have about 1 day's worth of trading in silver right there. That's it. They have 140 million ounces of silver in London, yet they're trading over 600 million ounces a day. They have 1 to 2 billion in paper claims, ounces, 1 to 2 billion ounces of paper claims standing against 140 million ounces of silver. All of that metal has come back to the United States, and we were supposed to believe that it was under the auspice of tariffs. No, I said from day one, this has nothing to do with tariffs. They're reshoring it. The LBMA is on the ropes right now. And in other words, price discovery has been a function of suppression by the West. I think there will come a point a few years from now where the price setting is done in the East. And the COMEX and the LBMA are rendered not the primary price setting mechanisms of the world. You could see a combination of both pushing gold and silver substantially higher. And if gold is pegged to a new system, which I believe it will, whether it be treasury market here or backing a new settlement system in China and the BRICS nations, there's a floor underneath that too. And so, yeah, I mean, I think it's both, really, and maybe equally.